What's up, traders? Welcome back to the channel. In today's video, I'm breaking down one of the most requested topics on this channel: how I grew up a small $14 account all the way to 5,000 using nothing but simple price action and Bollinger Bands. No indicator overload, no complicated systems, just pure market structure, patience, and high probability setups that anyone can learn and also apply. I'll be walking you through exactly how I approach the market, how I time my entries on the lower time frames, and how I manage risks, and most importantly, how I stay disciplined when emotions try to take over. So this is the same approach I have refined over time and shared my previous videos where I explained everything, and today I'm putting everything together step by step. So this is a quick disclaimer: it's not a financial advice. Trading always involves risk and results may vary. So I'm sharing you my personal experience and it is for educational purposes only. So always manage your risk and trade responsibly. So if you're serious about improving your trading, make sure you subscribe, because once this channel hits 10,000 subscribers, I'll be waiting for you to start a live trading sessions right here on YouTube. Real market conditions, real trades, real decision making, no edit. So I'll be taking you through live trading sessions just for free. Make sure you subscribe, and also if you want to trade alongside me, you will find the links in the description box to the brokers that I personally use. You just create an Xness account and a World Trade account, because those are the two brokers that I will be using in my live trading sessions. So creating an account through those links, and it can also help support the channel, and there's no extra cost to you. So grab a notebook, remove distractions, and watch this video till the end, because the concept I'm about to share can completely change how you see the market. Without wasting much of your time, let's jump right into it. Okay, so the first thing that we are going to do is we are going to draw the lines of confluence. That is the volatility 10 index, right? So in the volatility 10 index, what we're going to do is we're going to draw the resistance at the top. This is the resistance at the top. So this is an area where price is overbought, and BAs are very powerful. They always push the market downwards at that point, right? And also there's also another major area of confluence that is in between. This was once a support, but it was broken to the downside to become the resistance, right? So you need to take note of all these things. Once the support is broken to the downside, it becomes the resistance, right? And then there's also another major area that you need to consider. That is the area that we are now going to trade, right? So what we are going to do is we are going to zoom out. So remember, we are in the 4-hour time frame, and always know that in the 4-hour time frame, one candle always takes 4 hours to form. So if you have a small account, it is sometimes not advisable to trade a very high volatile market in the higher time frames, because it will not help you. And also sometimes if just a small fake out can blow your account, right? So now that we have drawn the upper resistance, now we are going to draw a trailing resistance, right? So this signals that the market has been in a downtrend for quite a long time, right? So the market has been in a downtrend for a long time, and here's what we are going to do. We are just going to mark that trend that was followed for quite a long time. As you can see, the support at the bottom and the resistance at the top. So this signals that the market is in a downtrend, right? And also there was a fake out previously. There was a false breakout, and it failed to go to the upside, right? So it means that once the market comes back into the trend, it means that the bulls at some point had the power to break to the outside, right? But however, we now know that the market can never break to the downside. As I always say, the market can never break to the downside. So at this point, we know we can sell, we can actually buy at this point and wait for the market to touch the support and then go up, right? But then we do not necessarily know when exactly the market is going to start buying, right? We know that the market is going to buy, but we do not necessarily know the exact time it is going to buy. So if you have a big account, you can just buy and then wait for the market to finish whatever it is doing and start going in your direction, right? So that's basically the whole thing. But then now we want to see what exactly we can use to identify that the market is now starting to buy, right? So we can look for other confirmations, we can look for other methods that we can use to identify or to support our claim, right? So another thing is there was also another channel that was created right in between. This is the support that was created because the market created lower lows that were in conjunction together, and also the resistance that were formed by the lower highs, right? So these 2 points necessarily means that there was a falling wedge that was formed, right? There was a falling wedge that was formed. Of course, yes, we were already in a falling wedge from the word go, but then this was an immediate or the most recent falling wedge. Mind you, there can be a pattern inside another pattern, right? There can be a pattern inside another pattern. And also, if those patterns are actually supplementary, it means that your trade or your claim or your prediction is actually stronger, right? So once the market broke to the downside, we know that a falling wedge always breaks to the downside. So we will now look for a supposed support, right? We now look for a supposed support somewhere to anchor from, right? Somewhere for the market to touch before it starts going up, right? Of course, it can just start going up right now, but then we can just look for a supposed support, right? So we now have to look for other confirmations, for other strategies that we can use that can support that the market has started buying, right? Once we get those, we can say the market is going to buy, right? So what I'm going to do is I'm going to use the Bollinger Bands. So I'm going to set up the Bollinger Bands. If you don't know how to set up the Bollinger Bands, just get another video in my channel where I explained how to use the Bollinger Bands as a trading strategy. It's there. I'm going to put it in the description box below. So once you do this, you then save and then you use your Bollinger Bands as a tool, right? So what we are going to do here is we are going to use a strategy that is known as a Bollinger Bounce. So as you can see, this the market is currently, the price is currently at the lower Bollinger, that is the middle Bollinger, the 20 moving average minus the standard deviation of the market to form the lower Bollinger. So at this point we can say that the market is now waiting to touch the lower Bollinger. Of course, it is near there. You can just buy at this point if you are not patient. But then if you have a small account, you can just put your buy limit and then you wait for the market to trigger that buy limit and start going up. But then, however, I don't really think I can wait for the buy limit. I'm just going to buy at this point so that when the market starts going up, I will be in profit already. If it never touches my buy limit, I will be in profit. In terms of take profit using the Bollinger Band strategy, I'm going to put my take profit at the middle Bollinger, right? So here we are already in profit. We had a $14 account. As you can see, the market did exactly what I said, and it never even bothered to touch my buy limit. It never even bothered to trigger my buy limit. So it means that if I were patient, or if I had waited for the market to trigger my buy limit, I wouldn't have even gotten this profit. So sometimes it is just advisable to just do what you're doing, and of course, yes, patience is the right thing to do in the market because it can get you very far. However, in this one, I chose not to wait for the market. I knew that the market was going to buy. Of course, as you can see, I've we have made a lot of profit. This is actually very much. I wasn't expecting to get this lot from this trade, but then it was very accurate. And now we move on to volatility 51 second. This is volatile. This is very volatile. So I would advise you to enter this one with caution. Anyway, as you can see, I've already drawn the resistance at the top. That is the top level that we had, and we always have to mark it, right? And then we draw some lines of confluence that were also important and crucial to take note of, right, including the support at the bottom, right? So just for the sake of you understanding, I'm just going to label the two areas that are important, that is the resistance at the top and the support at the bottom. And also there was a line of confluence in between that was a major confluence level that actually affected the market quite a number of times, right? So it means that at the bottom, at the support, there is buying power, right? There is always buying pressure, but then what we are going to do is we are going to view the market from a higher time frame, and also we are going to zoom out so that we can see clearly the areas that are important to take note of before we even do any analysis, right? So I've just put the shadow zones that are important, and then if we look closely, the market is currently at a point of support, right? There is a resistance point that was in between, and that is very important to take note of, right? So I've just put a shadow zone just to remember the point, and also to know if the market is ever going to do anything around that area, right? Another thing that we are going to do is we are also going to draw another line that is marking the lower highs that were created since this market was in some kind of a downtrend. So we are going to mark all those lower highs that were created. So it means that the market was creating constant lower highs, but then it was reaching to a point of stagnant support that the bulls at that point were very powerful. So this is the stagnant support that I've just drawn. So it means that this point is a very powerful point of buying pressure, right? So it means that at this point, once the market reaches that point, if it ever goes up, it means that it will go up with a very high volume. But if it goes down, if it breaks to the downside, you can actually take a sell signal. But then if we zoom in, we can see that there was also another channel that was created. This was actually completed, and it's important that we analyze it, because this is where we are going to take our trade from, right? So as you can see, this was a rising wedge, right? So once this rising wedge completed, and once it broke to the downside, as you can see right now, it retested again, and then after it retested, it then continued going down, right? So the laws of rising wedges, you already know, as I always explain in my videos, it has to reach all the take profit levels. So these are the take profit levels that I'm drawing in green, right? So these take profit levels should always be triggered. Of course, the last take profit level is difficult to touch, but then if it is ever touched, it means that this trade was very powerful. So as you can see, this whole rising wedge thing is already completed, and we can no longer take any trade on it because it is far too much gone, right? So if it is far too much gone, what do we do, right? Now we see that these take profit levels are the things that we are going to utilize. So once the market reaches any of those take profit levels, as you can see, it was doing sort of a retest, and now it is actually at a take profit level, and it is forming a green candle, meaning that there is buying pressure at that point. So what we are going to do is we are looking for a buying pressure so that we can execute a buy, right? Since all the take profit levels have been hit, it means that we are now going to look for a buying power. So at this point it is oversold, meaning that we can now take a trade going up, right? So this is kind of the same trade that I took in the previous trade from $14 to where I am right now. But then if you look at it in the 1 hour time frame, it is also oversold, meaning to say we can just put a buy limit at the last take profit level and we buy at this point. Since the market is going to buy, we know that we can just make profit either way. But if it ever goes to touch the last take profit, we can always wait for it at that point, and it will trigger our buy limit, and then we go up with it. So now let's go. Let's see if we can maximize on this one. So we are going to see if this is going to make sense. And as you can see, we are already in profit. The market is buying. So this is more like a sniper entry, because the moment I ended, it started going up, right? So I haven't mastered the art of taking sniper entries, but then I'm working on it. But then it would kind of look like this, and they are very, very sweet. Those things are very, very sweet. I once had this one time that I traded a very, very good sniper entry. I made a lot of profit out of a very, very, very small account. Anyway, as we can see, I've set my take profit. Like in the previous video, I set the take profit at the middle Bollinger. So this is where I'm going to take my profit and then exit the market, right? But then I'm already in a lot of profit. I can just close because this is enough. But in terms of educational purposes, you would put it at the take profit. And as you can see right now, the take profit was hit, but then I was no longer in the market. As you can see at that point, that is where I had put the take profit. So if I had stayed in the market, I would have made a lot of profit. Anyway, let's move on to Jump 50 index. This is going to be our last trade, and I'm going to make sure that I try to maximize, because in the previous videos, in fact this year, I haven't made much profit, and I've had a lot of expenses lately. So I'm trying to maximize, and I lost a lot in the previous trades and in the previous videos, which is always common. But then as you can see right now, I'm drawing the support at the bottom and the resistance at the top, right? So this looks more like the same trade that I took in the previous video, but then it has a different setup on the other thing that is using the same principles, but then it is working in conjunction with the trades that I took in the previous trade, right? Anyway, as you can see, I've drawn the lines of confluence that are important, and now what I'm going to do is I'm now going to mark my pattern that was formed. So remember, we are in the daily time frame. So this daily time frame means is going to take a lot of time just to move just one candle. So you must always be ready to take a long time trade. You must always be ready to know that what you are doing will take how much time to be profitable, or maybe to get the loss, of course. So here's what I'm going to do. As you can see, there was a major area that was formed, so I'm going to put a shadow zone at that point. This is actually where the current price is. So it's important. As you can see, there was a point. This support was created a long time ago, and it was respected not once but twice before the current price, right? So this is the first time, and now if we are to look at it, it was respected this time, and now it is at that same price. So the probability of this support to be powerful over the current price is very high, because it has already overpowered this price twice before, right? So this is the first analysis that we have made. And also the other thing that we are going to use is we are now going to take note of the trend, our trend. So our trend is saying that the market is in a downtrend, right, forming lower lows and lower highs. So it has only formed two major lower lows, so it's not that powerful, but then it was worth considering. And then at the top there is also a resistance that was formed. This one was respected. And then if we move to the lower time frames, we're going to see that the market formed sort of a channel before it formed that very big candle. So we're going to take note of that channel. First of all, we draw the resistance at the top, and then after drawing that resistance at the top, we now utilize that channel that followed after that. That is more like a falling wedge, right? So this is just the same, more like a falling wedge. As you can see, just like in the previous trade, this falling wedge was broken to the downside, and we know our principles of falling wedges state that the market breaks to the upside more often than it breaks to the downside. So after the market breaks to the downside, it is an anomaly, and usually the market tries to correct itself. So it looks for a supposed support, like I said in the previous video. It looks for a support that is near, so that once it touches that support, it then triggers buying power, right? It can just start going up, but then that support will be very important because it triggers that buying power, right? So in the lower time frames, as you can see, there was a lot of selling pressure, but it reached the support, right? So we just moved down to the lower time frames again and again, and now this blue candle signaled that the bears are now starting to get back into the power, forming a morning star. That will be a start of our bullish momentum, right? So we go back to our daily time frame and try to maximize on this one. And also another thing is a double bottom, right? As you can see, it's signaled by those two circles that I've just drawn. This was a double bottom that was formed, so we can use that also in conjunction with other strategies that we've already said to support our buying power, right? And then using the Bollinger Bands, we can see that the market is currently at a point of an oversold, right? So we are going to use the Bollinger Bands strategy that is also supporting the bullish power, right? So now that we have analyzed this and we have made a lot of conclusions that the market is going to buy using different strategies, it's now time to execute the market. So I have executed, and I'm going to use a bigger lot because this is not that volatile, and also I have a big account, and also I need to maximize because I need a lot of money. So this is what I'm going to do. I'm going to add more positions and see if I can maximize and see if I can get as much profit as possible. As you can see, I'm already in $1,000 profit. This is a lot, and we can see that in the daily time frame the candle hasn't started moving yet. Of course it has, but then it still has a very long way to go, which means that we are going to hold this market and collect a lot of profit. Just stay tuned, stay tuned, because we are going to maximize. We are definitely going to maximize on this one, right? In terms of take profit, I wanted to put it at the middle Bollinger, but you know, it's a point that we can use, and there are two take profit levels that I'm going to put using a different strategy, of course, but they just work just as fine. And also I will close my trades manually, so This is a lot, and as you can see now, another candle is opened in the daily time frame, and it is a bullish candle. We are still buying. This is a lot. As you can see, we are already in 5,000 from just $14. Just 3 trades, just 3 simple trades that were very powerful. And now our take profit, we can just, we can just collect the profit. Time to close. It's actually time to close, guys. So just let me know what you think in the comment section below. Please do not forget to subscribe, hit the notification bell so you don't miss on any important update. Don't forget to create your account using the WordTrade link that I've put in the description box below. And also, I can't wait to see you on the live trading sessions that I'm going to do here on YouTube. See you next time.